What to expect from Canada's next interest rate hike announcement. It's happening this Wednesday. We're going to go through this article and what some of the implications are if there is another 25 or more basis point hike. That's the first article. The second article we'll be talking about from Urban Nation is GTA rents recovered to new highs in 2022. And there's going to be some interesting data in here that actually isn't in the positive. And then the last article we're covering over here is that how thieves stole a Toronto condo in total title fraud, selling for $970,000, and how you can prevent that with your own property. Now, if you're looking for some help on how to navigate the real estate market, especially in the 2023 market, whether you're going to the defensive or on the offensive, you can book a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and a question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto area on top of making awesome educational real estate content just like this one for you. And the first article that we'll be talking about is what to expect from Bank of Canada's next interest rate announcement. And for those of you who do not know, it's happening this Wednesday, January 25th, which is the first one of 2023. Now, some of the points that I kind of highlighted here is a lot of people have been watching the CPI data and the inflation data and all that stuff that's coming out. And the December CPI came in a little bit lower than what some people were expecting. So a lot of people are taking that hope and maybe saying that we're not going to see a rate increase. Now, the US data came in a little bit softer too, but then the Bank of Canada has to follow US generally. Now, if they divert, maybe it's a possibility, but most of the time they followed one another. So US still plans to increase, so therefore Canada should increase. However, the inflation has come down, so therefore technically they shouldn't increase. But the bond market is saying that there's going to be 25 basis points or 0.25% increase on Wednesday. But all of that is just a lot of stuff that everyone's kind of speculating on. People are technically like making swap trades on it and gambling on it, which is basically what it is. But it's very difficult to say, hey, look, what's going to happen. But there are a couple of things that I highlighted in this article that I did want to draw attention to that is actually making a difference in the market, right? So the first one talks about how the people who have HELOCs, line of credit, it's going to be challenging for them because it's already at prime plus 1% right now. Prime's at 6.45. So people are borrowing from HELOCs at like 7%, especially those who lend to private money at like 7%. You're basically at a negative right now. So the people are going to try to retract a lot of that money. So we're going to see a lot of movement in the private lending space, recalling and not allowing these to renew. And that's kind of where we'll maybe see some power of sales. Again, that's a very small segment of the market. But the other flip side of this is anyone who kind of used the line of credit to maybe make an investment property, or even worse, maybe they bought like a new car, they are going to be feeling kind of the pain on this because the rates are so high and they're expecting, like I'm saying, the bond market is expecting a 25 basis points, which means that that interest only payment is going to increase some more. Now, the other thing that is interesting to highlight here is that, and I'll read it out for you. Anyone who requires a fixed rate mortgage in the next couple of months should shop around frequently to ensure that they are getting the best rates. Now, this is very important. And I talked about this in the newsletter. So if you haven't signed up for that, you can do so in the description below. The fixed rate mortgage right now is much lower than the variable. And that's very rare. Usually the variable is like 1% higher than the fixed. So I've had clients been getting 3-year fixes for about 4.79, 4.99, whereas the variable right now is like 6.5. So you see there's a really big delta between them, more than 1%. Now, if you don't have 20% down, meaning you're insured, the interest rate is actually like 4.29. So the people who are going in to buy these properties right now are actually better off getting a fixed rate mortgage. So that's why I've been recommending a lot of my buyers to go, hey, look, you should definitely go and get a rate hold right now because the fixed mortgages are much lower than the variable. And with the variable potentially increasing on Wednesday, why would anyone get, a variable, right? You should really be getting a fix. And you could dictate what duration of fix you want. So if you think the rate cuts are going to happen at some point, maybe say a year or two, maybe you should get a 2-year fix. If you think you want a little bit more stability, and then maybe things will look a little bit better and say 3 years, and that's why a 3-year fix has been the most common that I've heard as of late, you should get a 3-year fix. So now people are actually being stress tested and buying at the 4.79 plus 2, so like 6.79, as opposed to if you go variable, you're getting stress test at like 6.5 plus 2, which is 8.5. So there's a really big spread between the two. And that's kind of where I think the things are going to be different this year. Most people are going to be buying with a fixed. Now, the other thing that's coming up is a lot of people who have renewals coming up. So they maybe got a 5-year fixed in 2018 around like 4%. They're going to be getting one at like 4.5% to 5%, depending on the bank. Now, the challenge is this, and I've been kind of calling it out for a while where I think OFC should be changing it. If you were to go and renew the mortgage at the same bank in which you have your existing mortgage at right now, generally speaking, you just check a box. That's all it is. The problem is if you're renewing, so this is if you own a home and your mortgage is coming up this year, there's a very good likelihood that the bank is going to give you a higher fixed mortgage than any other banks. And that's why in this article it says you should definitely shop around. Because the challenge of that is the banks are basically playing chicken with you. They're saying, hey, look, I'm going to give you this because all you have to do is check the box and you're good to go. Your monthly payment's going to increase. But the problem is it's going to be higher and you can't shop around because they're betting that you cannot pass the stress test with a higher rate. Do you see what I mean? So what you need to understand is if you know you can pass the stress test and your income's sufficient enough, right, where maybe you weren't on the brink in 2018 or your income has increased from when you purchased it, definitely shop around for your next mortgage as opposed to just checking the box. However, if something has happened or you don't think you can afford the higher rate or you can't pass the stress test, to keep the mortgage, you should just check the box and renew and just eat kind of like the slightly higher interest on the fix because you really don't have any option. So that's kind of the interesting thing that's happening in the mortgage market right now as things are segregating. And then the last thing I want to point out to you is, I think he being an economist saying that the next rate announcement is March 8th in 2023, and they're thinking that it's going to hold at that point. So I've been saying this has been a very important date. January 25th is going to set kind of the sentiment of where the market is going to be for the buyers and the sellers. And then we don't know how much inventory is coming, but generally we get a bump up in inventory come March. So if the sentiment after the March announcement is that rates are going to pause, it may be a little bit better than what it is right now. So that's where a lot of people are still kind of like wait and see to see what's going on. But if you've been following some other channels, I've been saying a lot, the actual kind of showing has increased. The number of offers has increased. Sales are still very, very low relative to kind of where they normally are around this time. I think we're going to hit 20-year low in like halfway through the month, but the activity has kind of picked up. Showings have picked up. It doesn't mean that, every property's getting multiple offers, but the good ones are selling quick, but there's still a lot of crap on the market right now. So that's kind of the lay of the market right now and kind of where things may look in next 2-3 months. Now, if you found this content useful, make sure you spread knowledge by smashing the like button. And you probably have some friends and family who are also talking about real estate in Toronto because, that's what we do, right? You can share this with them so that they also understand what's going on in the market. And while you guys are all at it, make sure you subscribe to the Prime Props channel. And again, if you're looking for some help on how to navigate the real estate market, you can book a call with me using the link that's right here, www.chatwithzen.com. Okay, so the next article we got here from Urban Nation, who does great job collecting stats. I'm just going to go through some of these stats that kind of came towards the end of 22 and to give you kind of my take on it, right? So they're saying that the average rent grew by 17%, which is 100% true, meaning that from January to December in 2022, rents went up 17%. But what I can tell you is that from November to December, the rents actually came down and they're stagnating. Now, depending on how much inventory comes onto the market on the rental side, we may see the prices stabilize or come down a little bit. At the moment right now, rents aren't looking too hot. But do keep in mind, it's January, February, so it tends to be a little slower. But if immigration really, really picks up and kind of like non-permanent residents, then we may see a chance of rents going up. But I haven't seen this much kind of like rent stagnation in terms of like sentiment in a long time. So that's what I'll say about the rental market right now. As for rental demand grew as turnover declined, which basically says that, again, people weren't moving out because, they got really, really good rents in the pandemic. Now, the interesting thing that they have here says that there's an increase in new supply as the condo stock increased by 19,000 units compared to the 10-year average of 17,000 units. And this is what I was saying in the previous video about whether the condos are going to be oversupplied. Last year was supposed to be 25,000 units that come online, and there's always some kind of delay. So you can see that basically 20% of the scheduled units didn't actually come online. Now there's 33,000 scheduled this year. If you put 20%, that would remove 6,000 units. So we're still at 25,000 units that come online, which is still higher than the 10-year average of 17,000. So we'll just kind of see how that impacts it. Now, this next one kind of ties into what I talked about. They're saying that more investors held onto their units as rentals, saying that a third of the units actually went on MLS for rent, rising from the 27% from 2021. And the highest we saw was 2015 and 34%. So you can see a lot of people are actually having the ability to hang on to them. The key thing you have to remember, though, the people who are holding on to these things bought them in 2016, 2017 for like $800-900 a square foot. It's the ones that are after 2018 where we start breaking the ceiling of $1,000 a foot. Then we're going to see a different story. Now you can see here, units renting for under $2,000 dropped by 87%. Basically means that there's nothing under $2,000 in the condo space right now because rents are getting up there. Pretty self-explanatory, given that rent went up 17% and vacancy fell to 1.5%, which is incredibly low. Now this is kind of my kicker. The rental construction starts dropped 54% last year. So the purpose-built rentals, so these are non-condos, generally pension-funded kind of big projects for people to rent, right? And you have kind of call it like professional management, saying that it fell 54% in 2022 to 3,400 units after reaching a multi-decade high of 7,500 units at 2021. And this is caused by sharp increases in interest rates, construction costs, and development charges. So you can ask yourself, if we are letting in 800,000 permanent plus permanent residents, and we're slowing down the rental construction, we basically have a back-ended kind of supply crisis waiting to happen, right? Because even if we get call it 25,000 units now, 25 next, it's still not enough for the amount of people that are coming into the system, or I guess Canada, Toronto, right? Because we're just not building enough. And this is kind of like a setup in the future for a crisis, but we're not going to see that right now. That's probably at least 3 to 5 years out because it's in the pipeline. It's kind of just baked in, right? And the last thing I can show you here is that the rents basically went up to a record high between kind of the different years by about $1,000. So that's how expensive renting a place has become. And it's very, very, very challenging for people who are trying to just get started, especially when they're younger in their career. But the key thing that may be of interest to you is that you can see right here, they also said that rents have started to show signs of leveling out towards the end of the year, which is why I said November, December, I saw some rents decrease. Now, where it's going to go this year, again, I'll keep you updated, but at the moment right now, rents are still very soft. They may pick up again seasonally in the spring and summer, but we'll have to see about that. Now, the last article we got here is how thieves stole a condo in total title fraud, selling for $970,000. So essentially what happened is someone's committing total title fraud, meaning they impersonated somebody. It kind of went by the agent, the mortgage broker, the lawyer, and the person buying it, they didn't know either. So how you're going to protect yourself is basically you want to get title insurance so that on the off chance, you're not here and someone does try to sell the property under you and they kind of impersonate you because they make a driver's license, et cetera, you're protected. So it's generally $1 for every $1,000 your property is worth, and it's well worth your money, and you can still get it after you close. So you just talk to your lawyer about getting title insurance. The second thing is that, again, if you're not going to be here, and this is why this happened to this person, because this person went back to China, you want to probably just set up someone so that they can go and check on the property, or just put a camera there while you still have internet so you can check on the insides of the property so that nothing funny is happening. At least this gives you kind of a peace of mind. Hopefully, having a lot of people see this, because it's a very big reactionary thing. We're in this weird society type of world where people are stealing each other's condo of impersonation fraud. It is very scary, and I totally understand that. So those are the steps that you could do to kind of give yourself a little bit of peace of mind, or to kind of protect yourself, whichever one works for you, because everyone's got a different level of risk management and whether their property is empty or not, right? Because they're clearly, again, preying on properties that are empty. Hopefully you found this helpful, and if you're looking for some help on how to navigate the real estate market, you can book a call with me using the link right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.